We're going to find out how Jamie reduced her mortgage payment by several $100s every single month, just like that, with no additional cost. And you can do the same and maybe more. Hey folks, hi, Anthony Nitz with eXp Realty. Been serving the Tustin and surrounding areas for many, many years. And recently just had one of my clients reach out to have a conversation about getting her mortgage insurance premium reduced or eliminated. And this is something that we realized that, you know what, there's probably a lot of people right now with the immense increase in equity on the properties that you're just missing out on the opportunity to eliminate that mortgage insurance, which can be a really, really big deal. So let's talk to Jamie for a minute and see what she has to say. Okay, so I'm here with Jamie Atterholt, one of our most amazing, best clients that we've ever worked with in the whole wide world. And she's also a great improvisational comedian. She's her and I have had the pleasure of performing or practicing at least in the past, so we do that as fun. But we thought it was important to bring this to your attention that if you have a mortgage that's a few years old, you bought a property in the last few years, or maybe it's more than that, that you're probably paying out on something that you shouldn't be paying out anymore, and that's mortgage insurance. Typically, a bank will charge you or will add mortgage insurance onto your loan if you have less than 20% down on the purchase. And that, unfortunately, is only in the benefit of the bank. It only benefits the bank. And what it does is, just so you know, we hear insurance and we think, okay, it's going to protect us somehow. That's not the case at all. What it does is it protects the bank in case you default on your loan. What they can do is then they can file a claim with the insurance company that says, hey, give us, back our losses that we incurred as a result of a default. Up to 125% of those losses. So sometimes banks make money when you default, but that doesn't help you in any way. It doesn't help protect you. It doesn't help keep your house. And I had a conversation recently with Jamie, and what she shared with me was a great reminder that I need to let everybody know that you need to check your equity on your property and make sure that you can get rid of your mortgage equity or your mortgage insurance premium. And there's a couple ways to do it. So Jamie, what prompted you to like even look into that?
Actually, it was funny. I kept seeing all the for sale signs popping up around my complex. And then I would see, and I'm not kidding, within, 2 months or so, I saw probably 3 of them. And then within a week, or not even a week, the sold sign, or an escrow or whatever the sign is. And so I would go on and I would look at what the houses were closing at, and they were significantly higher than what I paid. And so I knew that PMI, I did happen to know about PMI, and I knew that as long as you had 20% equity, you put 20% down, you didn't have to have PMI. And so that just kind of was my reminder to check with my original loan officer, and then talk to you about it, and then so on and so forth, go through the process. And sure enough, yeah, I just started kind of researching and realized that my house had gone up so much to where I was appreciated enough to where I was able to get rid of my PMI.
Right. And let's put some perspective on this for people so that they understand how important it is to check that equity is, because you only bought your condo a year ago.
Yes, I can tell. Can I share the numbers? I guess I can share the numbers.
Go ahead, please.
Yeah, so I bought it in October 2020 for $455,000, and it has appreciated in basically 1 year to probably well over $600,000,
and possibly more.
And possibly more, yeah, which is insane. So that's amazing. The other houses around me, one closed for 640, one closed for 620. 2-bed, 2-bath, mind you, just to have an idea of size. And I forget that the other one is they're all like up there in the 600s.
Right. And so you look at that, and if you had your mortgage for more than a year, it's something you definitely need to look into. And there's a couple of ways that you can deal with getting your mortgage insurance removed. We're looking at 2 different options. Jamie, you spoke to somebody about possibly doing a refinance. Is that correct?
Yes, that is correct.
Okay. And if you did that refinance, you're going to save about how much on getting rid of your mortgage insurance?
About $300 a month.
About $300 per month. That's a big chunk of money.
Mhm.
And
That's a
then,
car payment, basically, right?
yeah, really, yeah,
I mean, maybe
absolutely.
not the fanciest car, but that's still a car payment.
um, and then if you look at the other option too, there's so you may people may not realize this. The other option too is just go straight to your lender. A lot of banks have the systems built right in where you can contact them and say, I've got more than 20% equity. And they look into it, they run an automated valuation model, and they um, realize, okay, you got 20% equity, and then they eliminate that mortgage insurance premium altogether. And typically it's at no cost. Some banks might have a small processing fee or something like that, but typically it's at no cost, and it's absolutely worth it every single time.
Yeah, I didn't know about that methodology, so thank you for that.
Yeah, definitely. And I just thought this was so important for people just to be aware of, that they need to look into their equity to see it. So, Jamie, thank you for sharing this
Oh,
information with you. And one thing I want to point out, if you got just another second, I want to actually share my screen real quick.
also, can I mention something?
Yeah.
It didn't, in case people are wondering, I didn't do any big upgrades to my house at all. I literally just painted my house and I did the cabinet faces and that's it. So it's not like you have to put in all this, upgrading to get the value increase. It literally just increased because of the market.
Yeah, absolutely. That is what the market is. I just want people to kind of see something too. There's this, because this is an important factor as well. If you take a property, so like let's say you owed, we'll just call it 425 is your loan balance, right?
Mhm. Mhm.
425 over a 30-year mortgage,
Mhm.
and your rate was 2.875. Oops, 75. And if I calculate that,
875,
I'm sorry, oh,
2.875.
875, 2.875. Calculate. So roughly, that's roughly what the payment is, 1763, give or take a few dollars. And when Jamie gets her equity, I mean her mortgage insurance premium to drop by $300 per month, a lot of us, what we do is we take that money and we go, yay, more money. And we go, what do? We spend the money, right? But consider this just as an option, just something to think about. You go, well, I'm already used to paying $1,763 a month. What if I took that $300 and just added it on, just kept making that same payment? Okay. So right now, as it stands, your payoff of your loan would be in October of 2050, right? Yeah, 30 year. Okay. So we add the extra payment, and then we look at this chart here. So what ends up happening now is you cut off, by paying that extra $300 a month, you take off 5 years off of your
Wow.
actually in this case 6 years, because it's calculating it based on as if this was today, not a year ago. So you're cutting off 6 years of your mortgage by continuing to pay that $300. Now the good news of that is you don't have to do it, and you could just, like a holiday rolls around, you go, I need a few extra bucks. Well, then you don't make that payment. But you could do that, bring your principal down, which then also increases your equity even further. So if somewhere down the line you have to sell your property, you've got a bigger gap on the property, regardless of whatever the market condition is, and it can make a really big deal. So
Very
something to
cool.
consider that everybody should do if you get your PMI removed. Don't just go spend your money, or use it to invest in more property. We can do that. Did you know that?
That's the plan. Also, what I learned is that if you go on Zillow and it's like, oh, we can estimate your property value, don't listen to that because it's most likely worth a lot more actually right now in this market. I think mine was estimated at like no, like 580 something maybe, or 59. I don't remember, but I know the appraisal, like all the other houses were coming in much higher, and I suspect I could get it much higher, not much higher, but higher than what the Zillow thing estimated it at. So don't, like I would say for your clients especially, don't just have have them look there and get discouraged and go, oh, it's probably not appreciated enough yet. Like talk to their, their lender, whoever, so that they actually know the real amount, because that might be extremely inaccurate. Not extremely, but enough to make a difference.
Exactly. No, you're exactly right. It is. That makes a huge difference. And we've known for a long time that Zillow is not always accurate.
It is not.
So
Nope, it is not. So I'm really glad, I did not listen to Zillow because I didn't think mine had appreciated enough. It also helped me though, even though I'm not really getting the cost, I don't remember, the cost is minimal, but the cost is just lumped into your loan again. So you don't have, you can pay it out of pocket, but you can also just lump it into your loan. And that was useful to know too,
Yeah, definitely. If you're going about it to do a refinance, like one of the things that I suggest to a lot of people right now is if you're in an FHA loan, you had to pay an upfront mortgage insurance premium, and then you're also going to have a monthly mortgage insurance premium. If you contact FHA and say, can you get rid of my PMI or my mortgage insurance, they're going to say no. You're going to owe mortgage insurance all the way down till you have $1 in your account. They'll still charge you mortgage insurance, even if you only have $1 in your balance. So in that case, that would be a time to consider doing a refinance. The whole purpose of an FHA loan is to be able to purchase with a low down payment to get into the property. But if equity is increased, now you could qualify for that conventional loan to get rid of the FHA loan. And depending on when you do it as well, you might even get a portion of that upfront mortgage insurance premium refunded back to you. So definitely something to consider. I appreciate the fact that Jamie was willing to share. It's a big deal for a lot of people, and it might have just made a difference in your life. I mean, even if it's only a few $100s a month, or for some of you, based on Orange County median home sale prices, it could be a whole lot more if you can eliminate that mortgage insurance premium. Look, if you have a property and you're kind of going, gosh, do I have more than 20% equity? Even if you've only purchased, less than a year ago, reach out to me. Happy to help you out. It's what we do every single day. So it's not a big deal for us to run evaluations on properties. Not a big deal. If you're thinking, gosh, wow, we've got a lot more equity than we thought, and you're thinking about selling, we help with that as well. So love to chat with you. But the only way that I can help you out is if you call the number that's on the screen right now. Folks, it's what we do. We're here to help you any way that we can. All right. Thanks so much for watching, and take care.